Most traders get confused because they think every little movement changed the market, but not every movement matters equally. Welcome to Mastering the Sweeps, a Nueva Voz trading series. Here we apply the Lighthouse strategy, a disciplined approach to observing liquidity, structure, and probability in the market. Remember, your job is not to find trades, your job is to observe the market until it reveals one. Here we are, another day or another week or another time, depending if you rewatch this video. But I'm just saying that I'm so grateful. I hope that you enjoyed this video. We have been moving through the just the sequence, and I hope that this has helped you in your trading journey like it has helped me. So let's go ahead and get started because I like to keep it at least 20 minutes, 30 minutes at the maximum. Okay, so today is something super important. We're learning about internal versus external structure. This has been a journey, especially when you start moving away from, patterns and just like the basics. This video, oh my gosh, it's going to change the game. And when I say I took my time and I studied, how could I not only give you the precise words to help you guys be a better trader, but the visuals, oh yes, okay, you're gonna love them. Okay, so this is all about time frames. Time frames is just as important as anything else in the market. If you're able to go from the higher time frames like the daily or the month, I could start at the monthly, weekly, or daily, even a 4 hour to 1 hour. Those are all of your higher time frames. So you will see like an HTF for that. Then for your lower time frames, okay, that will be LTF. All of that is for internal moves because those are like the smaller moves. So those are your 30-minute charts, your 15-minute charts, and below. All right. So by the end of this lesson, you're going to understand three things: what is internal structure, what is external structure, and how higher time frames and lower time frames work together. Oh, real quick. This is what I was talking about. You will see the HTF, higher time frame, and lower time frame, LTF. If you need to write that on your notes, go ahead and do that because you will see that again. Okay, so last week we focused on fake versus real change of direction. Okay, so now we're going one layer deeper because now the question is not, did structure break? Now the question becomes, what structure actually changed? And not every structure change. Oh, sorry. Not every structure shift changes the overall direction. Sometimes price changes internally, while the big direction stays exactly the same. And if that was too broad, that's why I got the visuals, okay? Because I'm a visual learner. I need more than just words. So for my people who need visuals, stay with me. I got you, okay? We're just going through the intro before we go even deeper. All right. So, you've seen external structure. about 5 times so far. Okay, so let's break this down. External structure. This is the higher time frame narrative. Narrative mean that it tells the story of the higher time frames. So everything from 1 hour up, those are external moves. Those show the bigger overall direction. Okay, this is where we identify overall direction, major liquidity, major targets. Okay, so let's see who controls the market. The first thing we ask is what I just said. Who controls the market? That before you get on the chart, or if you are like me and you look at the higher time frames once a week, but live in the lower time frames, which are the internal structure, because you already marked up your highs and your lows. All right, awesome. But you don't have to be. Okay, so you're going to read your external structure, define who's in control. You're going to execute your trade with your model and manage your position once you end there. All right, so here's what we got. Okay, so first and foremost, I need you to pay attention to the time frame. This time frame is the 1 hour. Let's go bigger. This is the 1 hour time frame. Again, it shows you, or it identifies, external structure, liquidity, and directional bias. All right, so at the very top of this line, you know that we have, especially if you have been with me for a little while, we have our liquidity. The top line is the buy side liquidity. The bottom line is the sell side liquidity. Okay. So how did I find it? I honestly, I use my Fibonacci to help me to get the precise, but we will learn that later. Just know I found the major low. I even circled it for you. And the major high. If you don't know what a Fibonacci is, this is one method you can find it. Once I marked that up, I went in the middle to do the mid-range. The mid-range is just as important because you don't want to trade that, because usually it is movements like consolidation. There's not many strong directional movements. Like, look at here. It did continue higher a little bit, but then went right back down. So these are the consolidation moves that I was telling you about. That's why the mid-range, we don't trade it. We trade in the premium zone, like above it and below it. If you don't know some of these words, here is your core frameworks that break down the vocabulary. When you are looking at the blue arrow, that is showing you the uptrend direction. The red arrow shows you the downtrend direction. And then the yellow arrow, those are your consolidations, go side to side. Okay, this is the last time you'll see it like this, downtrend or uptrend. We're going to use the actual vocabulary after. Okay, so I really want you to pay attention to the red box. So this is called your premium zone, everything above the mid-range. This is where traders are looking to sell, because think of, you want a pair of shoes, but you don't want to buy it. You don't want to buy it when it's about $149 when you can get it at $140. You see what I'm saying? So that's why you want to buy when it's low and sell when it's high. But if you, okay, and let me go back, let me put it in like a narrative form. Think now that you are a business person. You have the best shoes, you know that you put the quality in, and you want your return, your money return. So you want to sell that at the very highest that it can ever go. So in this case, it was about 149. So that's how I remember the premium versus discount. And then again, premium, just when you think of the word, it's high value. When you think of discount, it's cheaper. Okay? So if you don't learn anything else, premium equal look for sales. Discount means to look for buys. Now, we talked about external. Let's look at the internal. So, the internal structure helps us refine three things: entries, stop losses, execution timing, meaning when are you going inside this market? Here's the first three things. Okay, now for my visual people, this movement matters so much because it must be interpreted, meaning you must see inside the higher time frame narrative. This is literally the same chart, the same exact chart, but the only difference is, I want you to look at these candles. You see at this range, I wonder if I can make it go even closer. No, I cannot. But these are the same movements, but you see so many more candles. That's the only difference. And because you see more candles, you may be able to see the sequence happen faster than what it actually showed on the external. So I'm just going to give you a quick view real quick. I'm going to go back to the other picture and just look at the candle real quick and how small it is. And then, boom. It looks super similar, but because this is on the 1 hour, they have combined candles to make one candle. So it takes these small movements and just shows you the bigger picture with the bigger candle. Everything is the same except for some of the vocabulary. And this is what I was telling you about. The bullish internal movement. Bullish means it buys. Bearish mean that it is selling. And consolidation is moving sideways. But you can also see. Okay. And how I was telling you guys, it shows you the internal movement. You see when the structure is breaking and it makes a higher high and it continues making a higher high. Then you see here, because it was supposed, I'm not going to say it's supposed to because the market is not supposed to do anything. But you can see here that if it continued higher, it would have made more break structures. But instead, it sold past this area that used to be the high point. So now we are in the change of direction area where sellers are. You will also see top-down analysis. That is basically telling you to look at the higher time frame and compare it with the lower time frame. How I do it, I usually do the 1 hour narrative because it tells you the story. Remember, the higher time frame combine candles together to give you the overall move. Same direction though. And then the 15-minute is for execution. Why? Because you're able to see the moves quicker and more defined than if it was on the 1 hour. All right, so now we're going to compare both of them. And this is what top-down analysis is. You look at the hour, and you look at the direction. Where is the market? And yes, this is the same exact picture, because you don't need another version of the chart. You need familiarity so you can understand. So again, when both time frames align, meaning they are kind of the same in their movement, it usually becomes clearer, stronger, and easier to execute. Okay, let me just put it like this so you can see. All right, so this is the 15-minute, and remember, this is the hour. So you can see the market still went up where this line was, but you get more information, okay? It still retraced down, and it still continue up. But if you really try to look at the details, you see more candles at the bottom, which is the 15-minute. When they align, when they are very similar and they are telling me, hey, this is good enough for an entry, your model is here, you love that. You love it. Okay? So the number one thing is that you want both time frames to be aligned so that their movement becomes cleaner, stronger, and easier to execute. And when it finally aligns, same chart too, okay? Like I just said, is cleaner. And then the fact when it's not aligned, oh my gosh, it does not refine it. Here we go, right here. This is where emotional traders usually get trapped. The lower time frame move, but the higher time frame narrative never changed. Meaning, if in the internal move, okay, we had that the market would continue to go higher, but for the higher time frame, like the hour, it's just moving as consolidation. It did not make a higher high. It did not go high. For the higher, it just went to the side. That is when it misaligns. So now, instead of reacting to every movement, we ask, okay, is this internal movement or did overall control actually change? In a simpler form, did the internal structure change the direction, or did the external structure change the direction? This is my favorite part. Okay, this is now your practice. So before you go to your chart, because you don't come to mastering the sweeps without taking at least one thing or more away and without you practicing. Okay, so before you go on your charts yourself, practice observing first. I need you to screenshot this and then just do it. Why not? You want to be a trader? Here's an amazing starting point. You have enough. I gave you enough. And then I gave you notes too. Okay, so you can mark up your chart and then take it, practice it. All right, so remember, ask yourself which structure actually matters most here. Okay, here's your question: which structure matters most, external direction or internal movement? Here's your steps. This is what you need to mark to be successful. Take a screenshot and practice it. You got this. That was your 1 hour. Okay, here's your 15. One thing about me, I don't play. when it's time for you to practice, or if you need something, I promise you I'm going to fill in the gap and do the work so you can just learn. So take a screenshot. Everything you need to complete this is there. You got this. All right, last one before we go. Remember, the goal is not reacting faster. The goal is understanding behavior more clearly. Screenshot this if you need it, because it's so true. Like, these are gold. How do I know? Because I am a trader that's still trying to figure it out. But thank you so much for tuning in. I hope that you took at least one thing away from this video about internal versus external structures. And even if it's just one, rewatch it. I made this video for you. Okay, so I hope that you enjoyed it. I hope that you learned something. And whatever you learned today, comment one thing in the comments, because I'm reading it and I cannot wait to see how you are transforming. Have an amazing day, and I'll see you next time.